Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka.
And I'm Yatin, Mota.
Well, Yatin, the Bulls made a comeback in style, given the fact that it's a Friday and we have a lot to cheer about. Given the fact that after yesterday's drop below 19,500, we were expecting some bit of weakness today. But thankfully, we had positive global cues, and because of that, we've seen the market stage a very smart comeback. In fact, the Nifty has reclaimed that 19,650 mark. In fact, it did reclaim that 19,700 mark as well. Even though we didn't end above that, but we were cruising above that 19,600 mark in today's session. Look at the broader markets. Mid and small cap indices have both gained somewhere around 1% each, and volatility index has dropped 10%. Yesterday it gained 10% and today it has dropped 10%. What was doing well? Of course, the Pharma pack that was on steroids today. That index was up 3%. You had metals up over 2%. PSU banks up 1.5%. Nifty IT was the only pocket that wasn't really doing all that well in the first half of the session, but even that managed to make a comeback. Even though we had disappointing Accenture earnings to digest, most of the IT names managed to come back in the green. But let's take a look at the individual movers then. On the Nifty, we had the likes of NTPC, Hindalco, Dr. Reddy's, Divi's Labs, Tata Motors. Losers were few and far between today. We had Tech Mahindra, HCL Tech, Power Grid, Asian Paints and TCS. Those were among the top laggards on the Nifty. But talking about the broader market action, Yatin, quite a lot of movers there as well. We had a Naveen Fluorine, in fact, tumbling over 13-14% on the back of a management exit, right? But what were the other movers?
Now, if you look at MCX, that is also one stock which had some pain point. Obviously, market regulator had said them that do not go ahead with the software that TCS has co-developed. Probably the new software testing is still underway, and SEBI doesn't want last minute glitches. So a lot of things for MCX which came in from the regulatory side. However, after a 7-8% decline, the stock managed to recover most of its losses. Obviously, Vedanta in focus. We had Reuters report and Bloomberg report suggesting that there will be a demerger, and ahead of that, the stock was up 7%. Sun TV, Hindalco, Hoodco were the other stocks which are doing well. What is not doing well is the likes of Cube Investments, TI India. That saw a block deal of nearly 18 lakh shares at 2,900 rupees. However, the stock closed close to 3,000 bucks. So some bit of recovery from the day's low. However, if you look at stocks like RBL Bank, that hit a fresh 52-week high. Sobha Developers, NTPC, PFC, ONGC, REC, Coal India, and you name the PSUs and they will be on the list. So a lot of stocks at the 52-week high, especially the PSU stocks.
All right, with that, let's take a look at the stocks that are on our radar. Of course, starting with IT stocks, Yatin, just a few days ago, we had Morgan Stanley bullish report coming in on the IT space, wherein they had increased the target prices on most of these companies, both large and mid-cap companies, by anywhere between 11 to 29%. And yesterday, we had Accenture report earnings, disappointing set, given the fact that, guidance was pretty weak, FY24 guidance of 2 to 5% vis-a-vis expectations of 4 to 7%, indicating weakening client spends and demand weakness going forward. And important to note that there was weakness in the communications, media and technology end, as well as the consulting business as well. And brokerages believe that could spell some bit of weakness for both Tech Mahindra, which has a 40% exposure to communication, as well as Wipro due to the weakness in consulting. Commentary seems to show that there is no improvement in client spends just yet, and of course we've had the Fed indicating that interest rates will stay higher for longer, and of course they had hinted that there will be fewer number of rate cuts in the next year. Vis-a-vis expectations of 4, we are now looking at 2, according to what the Fed had to say. And now on the basis of that, of course, companies don't really expect too much improvement in client spends, because we had seen discretionary spends slowing down, and that was of course reflected in the earnings for some of these IT companies in the first quarter. And now it looks like the near-term demand environment will remain weak going forward. In fact, Nirmal Bang expects demand to be slower for longer. As I mentioned, that the rates will also remain higher for longer. Even though Morgan Stanley says that a strong outlook for FY20 revenue growth, FY25 revenue growth, improving margins and double-digit EPS growth will keep valuations afloat. The mood right now has been spoiled by Accenture, and but hopefully the deal wins, the momentum in deal wins will continue and maybe set the stage for a stronger FY25 for some of these IT giants. But for now, near term looks a little bleak for some of these IT names.
Yeah, and that has been the case since the last quarter, and let's hope the IT sector really recovers, because that is one of the big contributors when it comes to forex remittances for India as a country, and obviously the IT company is one of the largest in terms of exports. Now, if you look at the IT pack, obviously that there was some select pressure there, but MCX, as I was talking earlier, that is one stock which is in focus. Stock went down as much as 8-9% in trade. More importantly, if you look at the news, market regulator SEBI has told MCX to keep the proposed go live of the commodity derivatives platform in abeyance, which means that the new software will not be implemented as suggested by MCX's exchange filing, which was supposed to go live on 3rd October. Now, as far as mock tests are concerned and mock trades are concerned, that will be ongoing according to the SEBI diktat to MCX. Most importantly, SEBI is informed that the matter with respect to Chennai financial markets and accountability petitions involves technical issues, and hence a lot of things need to be worked out there. Obviously, these are reports which are suggesting that there is another tussle with a few set of brokers which are not really happy with MCX's new systems. Now, if you look at the writ petition filed by CFMA on CDP is pending before the Madras High Court for disposal, and probably this could mean that the kind of tie-ups that they have with 63 Moons till December 31st could be extended. We don't know, because these are court matters and we are already in October. So if the new system doesn't get implemented on time, probably 63 Moons will have a great time, because they'll get the money for the software maintenance services. However, MCX could have some serious earnings impact because of this event.
Right, Yatin, and of course shift to the new platform was the big trigger for MCX, because it has seen a fair bit of run up over the last last week or so, when CNBC TV 18 reported that we will be, in fact, MCX will be shifting to the new platform on the 3rd. But now that's not happening, and the disappointment, of course, is palpable, as we can see in the stock price as well. But let's talk about Naveen Fluorine. Now, this stock was the top loser on the Nifty 500 index. Of course, management exits continue to plague the company. Stock was at a fresh 52-week low today. MD Radhesh Welling has resigned. In fact, he was the turnaround man for the company. He had led from the front, and now there is a question mark over the future growth prospect of the company, even though Vishad Mafatlal, exec chairman, will be taking over until the new MD is appointed. Now, investors in fact have been wary about the slew of high profile exits. Over the last 1 year, we've seen 3 top level exits in the company, and Morgan Stanley, of course, has also turned a little cautious. It says that it expects to hear from the firm as to how it plans to tackle these exits, even though it has maintained an overweight rating on the stock with a target price of 4,951 rupees per share, and it implies over 30% upside from current levels. Stock is down somewhere around 15% in the last 1 year, and the next big catalyst, of course, will be who will take Radhesh's position. Morgan Stanley, if we talk about its view on the stock, it's upbeat given the fact that the company's focus on high performance products and contract manufacturing expansion, despite a slowdown in the broader chemical space. This focus is something that has made Morgan Stanley still bullish on the company. But overall chemical space has not been doing well. The stock has not done very well over the last 1 year or so. But as I said, the next big catalyst will be who will take over as the MD of the company. So once that happens, maybe we can see some bit of recovery in the stock price. Yatin.
Absolutely, and this is one stock which didn't even try to recover from the day's low.
Yeah.
Opened 6-7% lower, and the kind of slide that we saw intraday, and you can see that the first half slide was quite big, and post that the stock really maintained those losses. And the concerns that the promoter family is not in a position to really take the business forward, because R.R. Welling was the one who was really building the business and scaling that up with new capex every time, and probably that was something which made the market more comfortable. And a senior management exit we have seen in many companies is taken quite seriously by investors.
That's true. Well, I think with that we've come to the end of this edition of Closing Bell. But Yatin, next week lots of cues to digest. We have auto sales numbers that we'll be reacting to on Tuesday. Given the fact that Monday is a holiday, I can see that you're not smiling. I'm sure you are keen to get out of the studio as well as I am. But auto sales figures and RBI policy on the 6th. So these are two big cues to watch out for next week. But with that, we've come to the end of this edition of Closing Bell. If you have any comments, leave them in the comment section below, and we'll take note of that. But from Yatin and me, thanks a lot for tuning in. Come back and join us on Tuesday morning with the markets. But for now, it's a goodbye. Stay tuned to Money Control for all your other news and updates.